Hello, very warm welcome. You're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Sneha. The whole week, the buoyancy in large caps what led to be a little comfortable on the valuation front, which took the markets to another record level. Though the gains did get paired and we've closed just briefly about 24,000. But then the standout gainer for the whole week were private space bank. VIX has cooled off by nearly 3% today. Let's see how the weekly data fared out for the whole week. Nifty clearly outperformed the broader markets. Nifty gaining with the around about 2.5%, and the biggest gainers on the index were some of the cement leaders like Ultratech Cement, Grasim. Reliance gained. Energy pack was also lifted because of the Reliance moves. Only Reliance gained on the back of the Jio tariff hike. Of course, in fact, the whole telecom space was also buzzing throughout the week. But then standout gainers were clearly the banking sector, especially the private sector banks. And this week we did see the record levels for Bank Nifty also. On the losing side, some of the defensive names, some of the pharma names, Cipla, and banks. There were names like IndusInd Bank, Eicher Motor. These were the top losers on the index. IT pack, metal, real estate, they were the gaining sectors. However, rollovers did saw little softness in IT and metals. Let's see how July series would pan out. But as of now, broader markets, they gained nearly 0.5%. This was completely the week for the large caps. But then some of the buzzing names from the mid cap were Indus Tower, Mazda, Dock, Kalyan Jewelers. Lot of stocks from the mid cap, but the real movement we saw in large caps only. And if you see in terms of open interest also, Snehi, looks like we are in for a leg up also for the July month, which is seasonally assumed to be
a good month. Good month coming in.
Average 3% of the return what we have seen in the last 10 years.
Yes.
So,
and 9 out of 10 Julys in the last 10 years have done pretty well when it comes to the July seasonality. So in case you're wondering, we've already seen quite the run up in the month of June. What can we expect going ahead? Well, that's the trend. 9 out of 10 Julys in the last 10 years have done pretty well. But I want to mark a few other stocks that have gained over the course of the weekend. Let's take a look at the defense names. You have Garden Reach Shipbuilders up 27% just in 5 trading sessions. That's a phenomenal move. And we have seen some frenzy coming in on the defense stocks. You have the likes of Cochin Shipyard, you have GE Shipping, Garden Reach. All of them have stellar moves. India Cements, next up I want to talk about on the back of block deals. Another 27% rally coming in over the course of the week of the block deals between that and Ultratech and Ambuja Cement. Moving on, Bombay Burma also 20% higher, Root Mobile 20%. Amara Raja, remember Tuesday and Wednesday, Amara Raja was the stock in focus on the back of that lithium ion pack that they had inked with Goshen, and on the back of that, Amara Raja also 18% higher over the course of the week. On the flip side, some top losers. Fertilizer stock Fact has been a top loser this week, 13% lower. Swan Energy 10%. Credit Access Grameen also 10% lower. You have Motilal, Happiest Minds, NMDC, Suntech. Big losing moves coming in on all of these counters. But let's also move on, talk about some other stocks that were in focus on the back of block deals, and they were Ultratech Cement, CE Infosystems, Vedanta. You had Hindustan Foods. This entire week has been a week full of block deals and quite the exuberance bought into the market on the back of that. Also 28th, which is today, then India was set to see 25 to 30 billion inflows in the next 10 months on the back of the India FAR bond inclusion in the JP Morgan Emerging Market Index. Very positive move coming in, and especially on the back of this move, PNB Gilt was a stock that did phenomenally well. Lastly, let's also mark the other big market event that we did see coming, and that's the SEBI nod for the entry and exit criteria of the FNO stocks. We'll be getting you more details on this later towards the show as well. But a big move and lots of stocks in the FNO space to talk about on the back of this. But with that, let's keep it going with what to make in terms of the market action that we can see coming in next week. You have Rajesh, Palviya, Head Technical and Derivative Research at Axis Securities, as well as Vinit Bolinjkar joining us today from Head of Research at Ventura Securities. Gentlemen, thanks so much for taking the time out and joining us on the show today. Rajesh, I'm going to come to you first. Record highs, and not just record highs, consecutive record highs we've seen on the benchmarks for the broader markets as well over the course of the week. Tell us, what sense are you making of these moves? Do you think this is a too much too soon kind of rally? Are you penciling in some kind of slowdown next week? And what are the levels that you're watching out for when it comes to the benchmarks?
So good afternoon, everyone. There is no sign of slowdown at this moment. the way these indices are, making a series of all-time high on a consecutive basis, that clearly shows that still buying interest is there. There is no as such fear on the street. Still comfort is there because now this move is done by most of the large cap stocks. The stocks which were in long consolidation have started participating the way Reliance, HDFC Bank, and other cement stocks have done in last couple of days. That clearly shows that again the 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 large cap stocks are now taking the charge to take index further higher. Though broader market is also showing good traction, mid cap, small cap also participating in this rally. So that clearly shows that there is a clear confidence on the street, and we believe that it was the first day of July series, so some consolidation or some profit taking, some position adjustment was there. But again, overall structure is bullish, and we believe that this rally can extend further for the month. Almost more than 6.5% gain registered by both the indices Nifty and Bank Nifty. And looking at the data setup, still put writers are aggressive at 24,000 strike. As well as 23,800 strike. So that clearly shows that these are the important level on the downside to hold the market again. And if we hold the 24,000 level in coming week, then yes, this rally can extend higher. And possible target for Nifty we can see towards 24,400 also so very soon. For Bank Nifty, 52,000 is the immediate support area based on the pool concentration. 52,000 as well as 51,800. These two levels are attracted more put writing in today's session also. So these levels may act as a support area in this decline. And again, if Bank Nifty crosses above 52,600 mark, then this rally can extend further towards 53,400 to 53,600 also. So both indices are looking bullish at this moment. Buy on dip should be your strategy.
Buy on dips should be the strategy. In fact, I have a follow-up for you, Rajesh, but then I'll come back to you. I have Vinit also on the show. Vinit, good afternoon. Of course, what we saw this whole week, banks were the clear standout gainer, and especially the private sector banks. And of course, they're trading near the 5-year average also. And despite the better ROAs and loan book growth over PSUs, what do you make? What do you make of it? And then the kind of rollover figures we foresee for Bank Nifty also. Are the private banks set in for higher levels from here, and PSU banks can also participate? Understanding now we're entering the month wherein earnings also starts to kick off.
Yeah, so I believe that this month, is going to be a very good month to look at for the markets because the results will be out. It'll be the first quarter of the new year, and we are expecting good numbers to flow through. We have seen strong numbers coming in from all the corporates in the last quarter also. And, keeping in mind, the formation of the markets today, I think we could, move sideways for the next few days because, we've hit the psychological barrier of 2,400, 24,000, and we're settling around those levels. I believe that we could move into a sideways market before we really see the market start rallying again. I expect that in the decline, it would be a good to buy into PSU banks. I see them coming back into their own because the numbers are going to be very strong, and a number of banks are looking to raise money because they have to achieve the statutory limitation of bringing their stake below 75%. So I believe that there could be a good standout rally in PSU banks, and so with banks all participating together, I think the Bank Nifty can move much, much higher, maybe in the next 4 to 5 days.
Interesting point, Vinit, that you highlighted, that are statutory levels that they have to manage and the kind of fundraise possible in the PSU banks also should be on radar from here. Rajesh, the follow-up question was for July series only, what Snehi also asked you, but very interesting data coming in. If you talk about the highest open interest, what is being reflected in the first day of the July series is at 25,000 now. The most active call was 25,000. Rollover data is about 3 months average. July has got a seasonality also. FI's FNO positioning is aggressively long. What is the broad range one should aim at for the July month for Nifty, Bank Nifty both?
So July is going to be very interesting month. Yes, as you pointed out, that 25,000 has attracted more call writing because the way market has moved up in last couple of days. That is given that kind of feel that the range has widened at this moment, because now we are going to have budget also in this month. So nobody wants to take risk to write near term near strike calls. So now, instead of writing 24,500, generally we see, 500 point from the current market price, or, beginning of the series, most of the call writers started, writing the those, strike. But at these series, it's going to be a different series, because the market has shown very strong momentum in last couple of days. The way rollover activity has been done, it has already above 6 month average, and almost 8 lakh shares already added in the open interest for the Nifty. So that clearly shows that this momentum can extend further. So 25,000 would be the, yes, extreme range on the higher side, and on the downside, we believe that 23,500 could be the lower band for the July series. So 23,500 to 25,000 would be the range for July series.
All right, Rajesh, thanks for sharing those levels with us. Lots of important levels, in fact, to watch out for on both the Nifty and Nifty Bank front. But gentlemen, will stay on with us as we slip into a very short break. We'll return with more on how to figure out how to navigate next week and talk about the week that went by. So you stay tuned. Welcome back. Still watching Your Trades on ET now. Let's keep the discussion going with both our guests. And Vinit, I'm going to come to you now for a little bit on the fundamentals. When I take a look at the sectoral gainers over the week that went by, surprisingly this time, IT, FMCG and Pharma have made it to some of the top indices. Defensives have done pretty well over the course of the week. Do you believe this is the course of action going ahead, where defensives are coming back into play, and this could perhaps be a safe haven in a market that is seeing so much exuberance or so much froth at present?
So definitely, if you see, there were a lot of stocks last week which, saw, in technical parlance, breakouts in the mid cap and the small cap segment, but, not many were able to sustain, and they've given up all their gains. Uh, I believe that the market is now, prior to the budget, will be moving more towards the defensives, and telecom will be doing very strongly. So I expect Airtel, Reliance, and Indus Towers to trade very strong. Apart from this, if you see IT, I have always been a skeptic in terms of allocating to this segment, because we are going to see a potential downside in the US market where IT jobs are threatened. So while IT is a trading pick for me, I will not be allocating aggressively to this segment. Pharma and FMCG remain top picks because we believe that the consumption story is coming back, and we will see very strong moves across consumption over the next couple of quarters.
Pharma and consumer, these consumption space, these happens to be your two top bets, top sectoral bets for you, Vinit. Rajesh, tell us, how would you trade in auto stocks, understanding that the June auto sales are also due coming week, and more or less the data shows that across the segment there can be numbers, the volumes could be a little subdued. Would you trade in this space, or the space has already moved so much, rather find bets in some other sector which are running?
Definitely. So, Priyanka, still auto indices have not shown any kind of signal of weakness. Still, most of the stocks from auto segment is still holding the ground at higher level. Though there was some profit booking at higher level, but still, if we analyze on the near-term, short-term structure, most of the stocks are holding the ground. The new theme which we have seen in last couple of days, that is, auto ancillary stocks have done well, like stocks from battery, stocks from tires. These all stocks have done well, and from there we can see more momentum on the buying side for auto ancillary space. But yes, if someone wants to buy stocks for short to medium term perspective, yes, auto stocks are still looking attractive. We are holding our bullish view, and we believe that this momentum can extend further in the automobile. If you get any opportunity or any decline, you should be ready to buy these dips in the auto stocks.
All right, so bullish on auto is the view coming in from Rajesh. Vinit, talk to us about the action that we're seeing in the primary markets as of now. 3 listings over the course of the week, 1 listing next week, and 2 more IPOs opening for subscription. What do you believe about this, sudden inflow of IPOs that we're seeing in the primary market? What sense are you making out of that? And also, do you have any views on MCure and Bansal wires that open next week for subscription?
So, we've seen fairly strong moves coming into the market, and every time the market hits new highs, flurry of paper is coming in, and all the papers are getting absorbed. Uh, the see today, to raise money in the markets, you better have good performance with you because the cost of raising money or doing an IPO is very expensive. So we can be sure of most of the time that the offerings that are coming to the market are going to be of good businesses, solid businesses, and we expect that the Bansal wires and the MCure IPO should see some very, very strong subscriptions.
All right, they're due for open for subscription next coming week. Vinit, my question. I'll come back to you only. 2 big triggers. One big trigger for domestic and one big trigger from global markets. What we want to discuss here. Domestic markets, of course, all eyes were on the normal monsoon or monsoon. There were some concerns at the start and mid of the June also that there has been deficit. But now good news has come in from the weather officials, wherein they have spoken about 3/4 of the country set to cover the entire country, and then the annual monsoon has actually covered 3/4 of the country till now, and very soon the pan-India levels also. And globally, but then is there any risk aversion which you see ahead of US CPI? How to trade one domestic trigger and one global trigger? How would one factor in both the triggers while keeping their investment and trades on the move?
So, one thing we have to be certain with, that the rainfall patterns over the last few years have been slightly shifted on the right hand side. What do I mean by that? They start off very weak in June, but July and August are the months where they pick up intensity. Again, somewhere late August, the rains kind of drift, and you have unseasonal sort of rainfall happening late September, October. So that has been the trend over the last few years that I've been observing. So we should not be unduly worried that the rains are slightly delayed. And as you suggested that, we've got 75% coverage. So we are in for some good rainfall. In fact, we should be rather concerned if there would be any kind of landslides due to heavy rains happening in the Himalayas, notably the states of Uttarakhand and Himachal. That's being said, as far as the domestic is concerned, the other cue that we are looking at on the CPI, I won't be too much worried out there because the US Fed has been very, very sanguine. They've held on to the rates. They've not cut the rates despite the other countries like the Bank of Canada and the UK cutting rates. So to my mind, I don't think it'll be more of any concern as the expectation of rate cuts has been drastically reduced. In fact, what I would be looking for would be a positive surprise coming in from the US market cues. So on the negative side, I don't see much that is there. And, this month should pan out smoothly in my opinion.
Okay, Vinit, thanks for that view coming in. Rajesh, I'm going to come back to you. Let's talk about a sector that has seen a rather contrast move coming in this week, and I'm talking about Nifty Realty. We spoke to experts over the course of the week, and they had to believe that commercial real estate 2024 could be the best year for that segment. And on the flip side, we have seen Nifty Realty languishing away in trade every day, in fact, for the entire week that went by. What sense are you making of the moves that we have seen in this sector? Do you think this is just a temporary speed bump in the upcycle that Realty has been seen? Because other than Godrej Properties, I see every major real estate player has closed the week in the red. So what's your view here as well?
So I think if I analyze the Nifty Realty indices, it's still in the consolidation. Since last 3 weeks, we are seeing that Nifty Realty is in consolidation mode. There was some profit taking at higher level, and looking at the indices view, we may see further some more pressure on the Nifty Realty, and there could be lower level towards 1090 or 1070 for Nifty Realty. But yes, some of the stocks, like as you pointed out, Godrej Realty, Shobha, Prestige, these all stocks are still holding the ground at high level. Even Lodha is also holding the ground at a higher level. But if we analyze the all most of the stocks are still under pressure, so there could be some more consolidation for next couple of weeks. But overall structure for Nifty Realty is in bullish trajectory. So if you get any opportunity around 2 to 3% kind of corrective move in the indices, Nifty Realty stocks, I think one should be ready to buy these dips, because again long-term trajectory is bullish, so we may see again resumption of uptrend in this real estate stocks again.
Rajesh comment is buy in almost all sectors, all long side trades, Rajesh. So tell us two of your recommendations for our viewers also.
So first one is from auto ancillary, that is from tire space. JK Tire managed to give breakout of last 5 week consolidation range. Looking at the overall tire space, we believe that here we can see a good momentum in coming week. We are projecting target for 450 to 4655 for JK Tire. Keep your stop loss around 420. Second stock is from oil and gas sector, that is Petronet. Now stock is approaching to its multiple supply zone. The way short covering was there on series, in today's data there is a long built up. So I think Petronet can continue furthermore upside. 344 would be the next target on the higher side. 323 should be your stop loss. And the third stock is Grasim. Very strong momentum in the stock. The way stock is moving on series of high top higher bottom formation, long built up was there in series data. So we believe that Grasim can extend its gain. 2720 would be the trading target. Keep your stop loss around 2644.
Tire, Petronet and Grasim is what Rajesh is liking on the charts right now. Rajesh, thanks so much for that, and both of you gentlemen, Vinit as well as Rajesh, thanks so much for taking the time out and joining us today. On that note, we'll let you go. But viewers, with that, I'm afraid we're completely timed out on this edition of Your Trades. Lots to watch for actually when it comes to next week's trading session. Lots of action coming in globally as well as India. You have a whole slew of AGMs coming in, bonus issues, stock splits, and lots of key announcements to watch out for.
And high economic data also, PMI data from many countries.
PMI data in fact on Tuesday next week you have PMI data coming out of major economies across the world: India, China, Eurozone, US, UK. You name it, and you have manufacturing data coming out. But on that note, viewers, it's a wrap on this edition of Your Trades. From Priyanka, me, and the entire team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.